Hello, everybody, and welcome to the Sense of Security podcast. Today, we are here with Ryan Gorman, who is the manager of retail education at CME Group. Since he has delved into the futures markets, we're going to ask him how that came to be. So, Ryan, welcome. How are you?
Hi, doing really well. Thank you so much for having me on here, Mary. Super excited to kind of dive in.
Awesome. So, let's start at the beginning. What first sparked your interest in financial markets, and how did that eventually lead you to the future space?
Yeah, it's a good question. It kind of goes back to my college days. I got into finance just in the college days, just knowing that I wanted to do something that related to money. I thought it was a good profession overall. And I had some family members that actually worked in the futures industry.
Mm.
So I kind of took that and ran with it a little bit, got a couple internships working more on the operational side of the futures world. But I got to sit and talk with futures brokers. That's what really sparked it, was listening to these futures brokers talk on the phone with clients, come up with trades, do market analysis. And I can see kind of right away that I really liked the energy that I felt in these rooms with these traders. And you can kind of see very quickly how it all kind of connects to the world. When you think about markets like gold or oil or the S&P, the NASDAQ, it's not local. It's very much global, and things that happen in these markets affect all the way from the very top all the way to the bottom of the supply chain. So it really kind of drew me in, being able to see a headline and then look at a market and see a market reaction and just see how kind of futures markets really kind of connected the world. Was really interesting to me. So I really just dove in from there, and then I was able to kind of parlay that into a few different roles that led me to my role here at CME.
That's excellent. I agree. There is definitely an energy in the financial services business, whether in whatever aspect you're in, definitely if you're in the front lines, and especially if you're doing research or trading. So you studied finance and personal wealth management at, I hope I'm pronouncing this correctly, Loras College?
Loras College,
Loras
yes.
College. This is in
Yes.
Chicago, right?
No, that's out in Dubuque, Iowa.
Oh, it's
So
in
it's
Dubuque.
just over the border. Yeah, it's just past Galena, just over the Illinois Iowa border.
Oh, wow. So almost like in farm country. That's a little bit north, right?
Yeah, it's honestly, it's pretty much like straight west, a little bit north, but yeah, right when you cross over a bridge and you're in Iowa, and that's Dubuque right there.
Oh, that's pretty cool. So at
Yeah.
that point, were futures already on your radar, or did you just go in general business or something else type of major?
I started general business. I really didn't know what I wanted. I just knew that business wasn't a bad option. There was a lot of routes you could do. So I had accounting on my mind. I had finance. I had a lot of these different things, marketing. But as I kind of grew into it and learned more about the trading world, and I got that first internship was over at RJ O'Brien, actually. That's where I really learned about it. And it's one of those things, it wasn't necessarily taught. We learned about investments through college, but all of it was through the lens of stocks or equities. And there was really nothing about futures, which I thought was crazy, being so close to Chicago and not really having an emphasis there. But it was a smaller school, so I understood. So I had to kind of do a lot of that myself. But as I kind of progressed and got a little bit older, had these internships, I basically then, right when I was coming out of school, I just got my Series 3, and that's what really started things. The typical route for what my degree was in, I would say, would be go get your Series 7, your 66, your 65. I did the track to go get my CFP, actually, the Certified Financial Planner. But I quickly realized that I was more into lessons than longer term, more of the trading aspect of it. So it took a lot of kind of just my own interests to go down that avenue.
Yeah, the internships are really important, I think, because it gets you in the door and
Yeah,
you get to see the feel of it. Is this the right place for me? And there's so many different
totally.
aspects of it. So that sounds excellent. So a lot of people first encounter futures as something complex or intimidating. Do you remember your own aha moment when futures really clicked for you?
For me, it's really when you start trading, you can learn all you want. And I actually had a family friend of mine who told me this when I was studying for the Series 3. He said, just pass that test, understand all the ethics and all of the regulations, but just pass that test, and then you'll really learn how to trade futures. And there was a lot of truth to that, because all the concepts help, but once you actually hit buy or once you actually hit sell, you can really start seeing how things move. You can learn all day about prices versus ticks when it comes to futures, and every tick in the S&P is $12.50. All of that's great. And then you have to know what is important to know. But until you're looking at a P&L screen, that's really when it kind of clicks for you. And so that was probably it. And I started at a unique time because so when I started at the company I started at was Blue Line Futures. It was a small introducing broker in Chicago. You can't make sales calls or trade unless you're a licensed Series 3 broker. And I graduated and started that role in June of 2020, which was the heart of the
Wow.
pandemic. So it was there, you couldn't get into a testing center even. And so I was scheduled to take all my exams and all of that in March. That all got canceled. So I was going into the office every day at the Board of Trade in Chicago, and I couldn't do anything. So I was just studying for my exam that was a few weeks into June, which was a wild experience. Just the whole city was dead, and the whole building of the Board of Trade, there was nobody in there except the five of us that were in our small little office.
Wow.
So once I actually got past that exam and I jumped in, it was just a crazy experience. But yeah, it's really, you have to do it. It's one of those things that you kind of learn by failing, and you just hopefully you can learn by failing on a smaller scale and have good mentors, which I did.
Yeah, it's the same thing. You can't learn about riding a bike, reading about it, or even, in fact,
Yeah.
cooking. You can look at all the recipes you want, but until you actually go about doing it. And that's why I think it's important. I'm just going to do a little plug here on Interactive Brokers has a paper trading account where you get a certain amount of money. I think it's like $1 million of play money, and you can use the platform to basically make trades and practice. And so that's also, I think the CME also has something like that as well, some sort of simulator. So anyway, that's something to keep in mind. Okay, so you spent several years at Blue Line Futures, which Blue Line is also a contributor to the campus, the Interactive Brokers campus. And
Yep.
you wore a few different hats: sales, brokerage, marketing, strategy, and media. How did that breadth of experience shape how you think about futures today?
Yeah. Well, it was a great experience. It was very unique. Like I said, starting in the time I started, right in the middle of the pandemic. But the people over there, they're very good at what they do and they're very smart. So I was just a sponge for my first, really the whole time I was there. But my first year, it was more of, hey, learn as much as you can, make as many calls as you can. We were a little old school, so it was making a lot of sales calls every day. So I was on the phone talking with retail traders. And that's the foundation of my role that I'm in now, doing education for retail. I spent the majority of my time that first year, 2 years there, talking to retail traders, educating them on why they should, one, either simply just trade with us, with our broker, or two, why they should even look at futures. We would talk to retail traders that would trade just ETFs or these gold mining stocks, all of these different things, and they might not have ever even thought about futures. So I was hammering home, hey, you should look at this for X, Y, and Z reason. If you're trading that, come look at this. It might be a little more cost effective. It might be more of a pure exposure play on the product that you want to be long or short. So that was how I got introduced to CME. And then I was writing a lot as well through a publication called TradingView. And I was working with representatives at CME where I would publish these shorter articles on different markets. But yeah, it was more of, I just tried to learn as much as I could from people that had been trading for a long time, which there was years of experience on the desk when I showed up. And it was from all different avenues. It was agricultural markets. It was S&P, NASDAQ. It was gold. It was crude. There was a wide breadth. So I really just tried to learn as much as I could. And then that really all parlayed itself into making some relationships here at the exchange, and then eventually coming over here to work just simply on the education side, getting away from the traditional broker and sales role that I was in.
I love that. And I like that you brought up building those relationships, right? It's so important in the early
Yeah.
part, mid part of your career too. So for listeners who mostly think in terms of stocks or ETFs, what makes futures a unique or powerful tool in the markets, in your opinion?
Yeah, I say this all the time. Like when I think about futures, I never want to tell someone just to stop trading equities and go to futures. But futures offer a lot and people might just not know what they offer. And I used to hear this a lot. My favorite part of my day was when someone would go, oh, wow, I didn't know that. Some of the biggest ones, it comes down, and this isn't an evolving subject, but being able to trade outside of traditional market hours is a big one. One thing I learned is that a lot of people that trade futures, they're not doing it full time. They have a job. They have a regular job that they go to from 8 to 5, 9 to 5, whatever it is. But these people, when they wake up at 6 a.m., they're looking at their markets. They're looking at the stocks that they own. And when they get home from work at 6 o'clock at night, they're looking at the stocks they own, but it's just off. And there's not much you can do outside of look. And through talking to these people, a lot of the times I would say, would you like to, at the very least, have the ability to go in and put a position on? I've never wanted to tell people, hey, go wake up and trade at 3 a.m. If you want to, great. But how many times are you sitting at your computer going, oh, wow, I would like to sell some here. I'd like to buy a few more here, but now I have to wait till the open tomorrow. And who knows what's going to happen at the open tomorrow. Whereas our markets at the CME are going to be open throughout the night. And then it's just simply the inherent leverage you get. Like the leverage it's such a strong piece. And if you are in these markets and you are looking to day trade and utilizing the margin, a lot of the times it can be more capitally efficient to look at the futures markets rather than looking at an equity position. And it might really feel no different to you. You might say, hey, I want to trade the S&P and I want more leverage. And you can come over to our markets and it might be more efficient for you to do. And so understanding those two are the biggest things. And it's the most light bulbs I would see with retail specifically is, oh, wow, I can get this kind of exposure pretty much whenever I like it throughout the week, day or night. And I can get that great leverage as well with putting up a little bit less capital. We're definitely the two biggest.
How's the liquidity though in the middle of the night or early morning?
It just depends on the market. If you're looking at like the S&P, the NASDAQ, gold, oil, these are very liquid markets. Again, it depends also what month you're looking at. If you go way deferred out month, a year out, and you're looking at 3 a.m. and a 12-month out oil market, who knows? But if you're looking at front month contracts we have some of the most liquid markets there are in the world. But it really just depends market by market. It is something you should look at. But a lot of our markets do have really strong liquidity, even overnight.
Great. So you often talk about futures as a risk management tool, not just speculative instruments. Why do you think that part of the story gets overlooked sometimes?
Yeah, I think there's an inherent fear with futures, which I totally understand because it's not like a stock where you can buy a share for $100 and that's the most money you can lose. With the stock, you could buy a share of a stock and close your computer forever. And really, there's nothing really you have to worry about aside from losing what you paid for it. With futures, if you do that, you're going to be in a lot of trouble because these contracts have expirations. A lot of these futures markets have a settlement that is a physical settlement, whether it's barrels of oil, whether it's agricultural products with just bushels of corn or wheat or beans. So there's that fear of, I don't want 1,000 barrels of oil showing up in my front yard, or I don't want to lose more than the $150 I'm willing to invest, which 100% can happen with futures. But if you're the type of person that's actively managing your markets and your positions, and you're saying, hey, I look at this stuff 5, 6 times a day, once a day, whatever it is, and I just want to be able to say, hey, I think the S&P might, drop a little bit here in the overnight session. I want to put on one micro position just in case that happens. That's great. And if you're willing to put in the time and understand how these markets move and understand the risks, it can be very powerful. One of the things that we might see occasionally is people don't necessarily understand the risks of the market. And then they'll go in, buy or sell a contract. And then all of a sudden, bam, the market will rip one way or the other and they get yourself into trouble. So it really starts with education. And that's why I'm biased on the education team here. But I always hammer that home. You really have to understand the product. You mentioned looking at simulated trading. That can help a lot too, just to see how when the market moves, it affects your P&L. But if you're looking at these things, you can really do strong relative value trading and figure out, hey, I want to be able to manage X amount of dollars in exposure to the S&P. You can do that with the futures markets, as long as you have a good understanding of how they work.
Education is so key. So from your experience, what's the biggest misconception retail traders have about futures markets?
Misconception, that's a good question. I do think it's the general, probably the one is that I'm going to get 1,000 barrels of oil showing up in my front yard. Now, These markets do have physical settlements. If you're looking at grains, oil, like I mentioned, a lot of these markets are physically settled. I'm sure you know with Interactive Brokers and all these brokers around the US here now, if you're actively trading in a market that's going to expire, now I don't want to speak for Interactive Brokers or any of these firms, but they're going to be calling you, texting you, emailing you, blowing up your phone if you're in these as they're coming up on expiration. And a lot of these brokers, they might just blow you out of your position at that point if it's a physically delivered contract and just say, hey, it's not worth it to us to have that risk. And it's definitely not worth it to you as an individual trader with $5,000, $10,000 in your account to take this into delivery. And there'll be established guidelines in all of the different brokers' front end systems on how that works. But that's why it's so important to know. But I do think that happens way less and way less because different brokers like Interactive Brokers have gotten out in front and said, hey, if you get to X point before these markets are going to expire and we're going to come up on delivery, we are going to take action on your behalf if you are not taking action. But trust me, you're going to get calls and emails over and over again looking for you to do something about your position, either to roll it, cut it, whatever it may be.
So if someone is listening here today and is curious about this, but hesitant to dive in, what do you suggest is the first educational step that you recommend?
Of course, I'm going to talk about the CME's educational system first. What I'll say is, though, there's courses that goes from what are futures to, hey, here's an advanced option strategy. It's really great. There's quiz questions. There's all this stuff. Along with that, we have a brand spanking new, really nice looking trading simulator that really does feel like a strong front end system. That's very new. A lot of people on the team, including myself, had some good work on it. So it's very great. And I recommend checking it out. But outside of just the plug for the company, go to YouTube and just type in, I'm interested in futures. How do I get into this? There will be thousands and thousands of free material of just everyday retail traders who started in the same position as you. Hey, I have $5,000 and I want to trade some micro futures. How do I do it? There is unlimited videos to do that. There's live streams. There's everything. And then from there, once you have the basics, what I always say is figure out a market that you're interested in because you have to want to trade this. So if maybe it's right now with oil going a little bit crazy, maybe you want to play in the oil market. Maybe it's gold. Maybe you're very interested in how the Fed's actions dictate the price of the dollar versus gold and silver. Maybe it's interest rates. Figure out what you like and try to really hone in on that because from there you can learn all of the fundamental drivers about that market using resources like I mentioned with CME. I know Interactive Brokers has great resources, and then go to YouTube and learn how these markets move. And then you can really dive into the technical side of things. And once you learn the technical side of things, then you can look at really any market because that you can overlay across markets, looking at different moving averages and things. But like I said, I think looking at CME does it in a great way, but outside of that and using Interactive Brokers, I use YouTube all the time. If I need to learn something on the fly and I want to learn it from the perspective of somebody that's in my shoes. So of the perspective of somebody that came from retail, who came from not having the understanding, it really can make it a lot more valuable and easier to learn in my view.
Yeah, it's amazing what you can learn online with these short videos. And some of them are entertaining too. So this has been great. Thank you so much, Ryan, for joining our podcast today. And it's so good to hear about all your experience. And we can only wish you many great successes at the CME group and obviously with your life and everything. Also on the Traders Academy campus at Interactive Brokers, we have numerous CME courses and also introduction to futures with study notes, quizzes, links, and so forth. And also you can check out the contributors who also do market commentary on the futures market. So Ryan, thank you so much. We really appreciate it.
Yeah, no, thank you. I love doing work with Interactive Brokers. So really appreciate you having me on.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com. Investments in certain commodities, precious metals, may be subject to significant price volatility and often involve risks related to market fluctuations, liquidity constraints, geopolitical events, and changes in global economic conditions that could adversely affect their value. U.S. spot gold trading through IBLLC accounts is only available to legal residents of the United States that do not reside in Arizona, Montana, New Hampshire, and Rhode Island. Short selling is an advanced trading strategy involving potentially unlimited risks and must be done in a margin account. Trading on margin is only for experienced investors with high risk tolerance. You may lose more than your initial investment. For additional information regarding margin loan rates, see ibkr.com/interest. Day trading can be extremely risky and may not be appropriate for individuals with limited resources, investment experience, or low risk tolerance. Please review the day trading risk disclosure statement before deciding whether day trading is appropriate for you.